Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with Certified Public Accountant Tina Moe.
If you incur business expenses that are unreimbursed by your employer or even your own business, you may be able to deduct those expenses on your personal tax return, but there are a few requirements that must be met. The first requirement is that the expense has to be ordinary and necessary in your trade or business. An expense is ordinary if it's common and accepted in your trade, business, or profession, and an expense is necessary if it is appropriate and helpful to your business. But an expense does not have to be required to be considered necessary. In other words, use your best judgment. The next requirement is that you were not previously reimbursed for the expense. Let me clarify this a bit more. If your employer pays you an additional money like expense allowance on your paycheck and you are taxed on it, you may still be able to deduct the expense, but only if you paid tax on your reimbursement. Also keep in mind, if you're eligible to be reimbursed for certain business expenses but you don't turn them in, the IRS says you can't deduct them on your tax return. Let's look at the case of an employee in outside sales who uses his personal auto for business purposes. If the use of the auto is a requirement to perform his job duties and his employer has a policy that disallows the reimbursement of auto expense, then he may be able to deduct these expenses on his tax return. Even if he receives an auto allowance, if it's included in his gross wages and he pays taxes on the allowance, he may still be able to deduct these expenses. So that brings me to the next requirement, which says that employee or business owners claiming unreimbursed business expenses need to itemize in order to take advantage of these unreimbursed business expenses. A taxpayer itemizes using Schedule A in their personal tax return, so the deductions are lost for those taking the standard deduction. Also, most of these types of deductions are subject to a 2% limitation, which means that the expenses become deductible only after they exceed 2% of your adjusted gross income. So there are limitations to how much of these expenses are deductible. Let's look at another example. Let's say we have Joe, a small business owner who uses his personal vehicle for business use and forgot to take a mileage reimbursement. How should Joe handle that for tax purposes? Here, Joe has a couple of options. If he's a cash basis taxpayer, he can take his reimbursement in 2013 and deduct the expenses on the business return in 2013. Or if he's a partner in an LLC, he may be able to deduct the expenses directly on his Schedule E against his share of the business income, or he can deduct the expenses on Form 2106 if he is an employee of his business, as in the case of a subchapter S. There are several options, but beware, not all options are as advantageous as others. Deducting the expenses and making them part of your itemized deductions may not be as beneficial, as taking reimbursement from your business and taking a deduction is never as good as a dollar for dollar reimbursement from an employer. So be sure to weigh out all your options to get the best tax treatment possible, and seek the advice of a professional tax preparer to make sure you're getting all of the deductions you're entitled to. For more information, visit my website at www.actservices-inc.com.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.